Hello and welcome everyone back to an Calvin Crypto video. I hope you guys are doing well. Today we're back with another banger PulseChain video giving you guys the latest and greatest of crypto news. And today I wanted to come out with this video to address the current state of the crypto market. PulseChain is being hit with large corrections. Even though we've seen a couple of green, beautiful days earlier this week, what is going on? Now, the first thing I want to do is zoom out because this is nothing to do specifically with PulseChain. So off the bat, do not kind of fall into that self-doubt. If you zoom out, you look at the rest of the crypto market, now everything starts to make sense. And we're going to actually zoom out even further. We're going to look at macroeconomics and see why is this happening. And most importantly, why I wanted to make this video is to make sure that you guys do not fumble your own bags. A lot of times, especially if you're alone, you might feed into your self-doubt and make the wrong decision. I just want to give a quick reminder. Being an investor is all about what? Inaction. Less number of trades is good. It's actually more. Less is more in this case. And I also want to remind people that actually not making a decision whether to buy or to sell or whatever is a decision. So the best thing to do is actually to do nothing in this case. Okay, and for a lot of reasons, like I'm actually going to back this up. I'm not here just trying to give you guys hopium, but I'm going to also talk about what does this mean for crypto in general, in the short term, in the midterm, in the long term. Is there still going to be an altcoin season, and what does this mean in general for the bull run? Now, before we get into that, I wanted to quickly start off with a video from our friend Somi and kind of go to a reply that I reacted. So here he's just initially talking about a chart that has a monthly candle, and because we just hit 1st of August, the monthly candle of the PMI, which is a purchasing managers index, which basically is a chart that surveys around, I don't know, hundreds of manufacturing companies to see their orders, to see their purchases, to see their employment, their prices, their inventory, yada yada yada, and they see from there how is the manufacturing industry doing. And usually this number, if it's under 50, that means the manufacturing industry is actually contracting, not good. Okay, if the number is over 50, that means we are expanding. So he's now here reacting to this chart. Okay, we've just had the new print monthly candle, and it is at 48. Lower than what we were in the previous month, which was 48.8. So yeah, he was most likely hoping to see that number starting to trim upwards. Now, what I want to tell you guys, that this actually makes sense while we're starting to see a lower trend. I don't think we're going to start seeing a trend upwards, but of course, anything that can happen in 30 days. I'm hinting at the Federal Reserve in terms of doing an action, because yes, we've seen Donald Trump really nudge the Federal Reserve and be like, hey, start start reducing the interest rates. We're going to get to why this is great, because of course this stimulates the economy. You start incentivizing people, or I guess another way of saying this is quantitative easing. Okay, and there's also the what was it called again? The Federal Reserve balance sheet. So this is more about debt monetization, which is kind of close to quantitative easing. This is effectively where the Federal Reserve starts buying government bonds, effectively adding to the bank's reserves. Okay, which is again really good. More people are likely, it will add more liquidity to the market, and of course there's more liquidity, there's more influx of money. Now you'll have people being incentivized to what? Spend. More incentivization for people to invest. And this is not only households, but this is companies to take on more risks, to hire more people, to upskill more people. It's good for in terms of domestically, right, in general. But we're going to talk more about this in a second. I just want to quickly watch this video and then let's react to what our friend Somi here is talking about and what is his thoughts. And of course, we're going to add my thoughts onto this. So yeah, I hope you guys enjoy this.
I can't fucking believe it. I can't fucking believe it. PMI came out at 48. Below expectations by a shitload. Can you fucking believe it? Oh my gosh. Just for everyone at home to remember, we need PMI above 50 to expand the economy, to show that. And we need above 52 for alt season to start. And we're now in the longest in history. below 52. I think this is now month 33. In the last 3 crypto cycles, it was between 6 and 13 months. We're now in month 33. Oh my god. I'm getting really fucking close. Someone's going to get sacrificed. Someone's getting sacrificed. And I don't need any weapons. I got my bare hands.
Shout out to our friend Sami for that video. But in terms of, before I quickly go to my comments here, which I actually did acknowledge that yes, we are in most likely one of the longest bear markets we've ever been. And I can quickly show you guys why, or kind of prove that is the case. But just looking at pattern recognition, one of the best things that you can do is purely look at the price action, look at previous data, and then just look at kind of try to point out patterns, and then you can easily see, which by the way, this coincidentally aligns with Bitcoin's halving, which is around roughly every 4 years. So if we look at from you can kind of see this purchasing managers index as a loop, right? A cyclical loop, kind of like a sine wave. And you'll see this a lot actually with the debt rollover cycle. You'll see this with the business cycle. You see this with the global liquidity index as well. So yeah, anyways, looking at this from kind of one trough to another trough, if we put this into days, it'll be just around 1,300, 1,400, which is roughly 3.8 years. Anyways, we're going to round that up to the closest year, which is around 4 years. Okay, now we do this again for the next cycle. Again, this is 2016, and then we had the bull market here, where obviously this is a DeFi 1.0, where Ethereum launched, Uniswap launched, really great stuff. And of course, the top of the Bitcoin price of that cycle, and same thing with Ethereum, was around this part right here, okay, where the market is really booming. And of course, what happens here is euphoric state and then major correction. Okay, so anyways, we go from here to there. That was also from one trough to another. That was also 1,400 days, 3.8 years. So kind of going from there, using that same pattern recognition, putting 1,400 days, we were expecting a rally, as you guys can see, like it immediately happens, but we haven't seen this. It's actually been 490 days, guys. We're just waiting for the PMI to go over 50. Right? And of course here he said 52 is just because we want to raise the bar slightly, because there's been cases where it did touch 50, but it was actually a false breakout, right? It's a false, it didn't actually, like for example here, you can see that it touched 50, but it was actually one more correction. Was it one more month? Yeah, a few months, and then until it actually went over. So that's why we just put the bar at 52, or even some people put it at 54. So yeah, that's it is undoubtedly one of the longest bear markets we've been in. But all I want to say, that the wait will be worth it, guys. We are legitimate, and I believe this, and I don't have a crystal ball, okay? I can't give financial advice. Who am I? At the end of the day, I can't say, I'm just a guy who's making YouTube videos, okay? I genuinely tell you guys, I believe that we are in the best place to be in this upcoming altcoin season, guys. We are in a cycle 1 narrative, meaning that we are in a blockchain that is experiencing its first cycle. The highest growth potential is in this bull run, which we have yet to see start. And I'm going to talk more about this, guys. There's a lot of things lined up right now in this video, okay? And by the way, this has taken me thousands of hours of research for me to condense this into like a 10-minute video, 20-minute video. Okay, I've spent like equal to a 9 to 5 in PulseChain, in crypto, in learning about Richard Hart, and looking at the macroeconomics is so important, guys. Once I started looking into macroeconomics, and by the way, big shout out to Ray Dalio. I was listening to one of his Audible book of how countries fail, and obviously like the Federal Reserve, how how they're incentivized to at some point they have to incentivize the debtors, at some point they have to incentivize the creditors, etc., etc. But all I'm trying to say, if you understand the macroeconomics, guys, you'll sleep like a baby at night. Like, we're gonna just keep it there. But this is my reply. Big shout out to our friend Sami. By the way, guys, he's one of the people that I was watching when I kind of got into PulseChain after I sacrificed, I took a hiatus from crypto, and then Sami was one of the first videos into PulseChain, and I still watch him when I do cardio and I do like a 5K run. I literally listen to Sami talk about the latest news. So yeah, big shout out to him, by the way. So this is my reply, and yeah, anyways, this is what I said. Everything is fine. Let me explain why. Definitely, this has been the longest bear market yet. Look at the unemployment rate, not above 5% rate, which, by the way, that's the recession, like official recession, I guess, level, if we're above 5%. But the trend is taking us towards it. And we're currently now at 4.2%. I'll show you guys a chart in a second. Causing recession fears. People are fearful for layoffs. There's even an article, you can check it out, you can quickly research this and verify this, that JP Morgan is giving 2025, the year of 2025, a 4% chance of a global recession, which, by the way, they actually lowered it. It used to be 60%. So technically this is good, right? Technically the whole recession fear is baseless. Not really, because people are actually, like, we're seeing the unemployment rate in the past couple of months, it has been rising. It's not at recession levels, but it's heading towards there. Something needs to be done about this, okay? And this is why I'm telling you, it's almost a good thing. Now, obviously, I don't want people to lose their jobs. Like, I really don't mean this in any type of way, but I'm just saying that the Federal Reserve, they're stubborn. They only want to intervene when things are looking bad. So one of the things is, of course, recession fears. They don't want that. A weakening labor market, they don't want that. So yeah, anyways, and as I said here, we're also basically already at the Fed's 2% target inflation level. Now, I only really go to trueflation.com, I believe, trueflation.com, to get the inflation rate. I don't really trust any other source, even if it's from the Feds themselves. Anyways, so yeah, what's even crazier, right? They talked about one of their FOMC meetings, how their target is to get it to 2% inflation rate. We just had a print, because with the beginning of a new month, we went from 2%, which is effectively their target, to now even lower, under their target. We're at 1.67 inflation. Guys, this is crazy. And I'm telling you, the longer we actually stay at these levels, you can really think about it as ammo for the Federal Reserve to do even more stimulation in the economy down the line. So again, this is why I feel like, okay, if we wait now, it's kind of like a slingshot effect. The longer we wait, the longer the slingshot effect will be. Okay, so I'm kind of like thinking optimistically in a realistic way, if that's even a thing. But that's my understanding. Like, I hope you guys are following along. So here's what I said next. As they see the labor market is weakening, they will start debt monetization and quantitative easing. The dopamine will be worth the patience, as Richard Hart, the founder of PulseChain. Time in the market, not timing the market. Okay, and again, this is I'll probably talk more about this in it, but this is one of the quotes. If you understand it, you understand it. Go to new. So here he said, we are in this together, our friend Sami, and I put a picture of the Federal Reserve balance sheet. This is another really great, and by the way, this is the chart of the unemployment rate. The percentage, you can see it's currently at 42%. It is a weekly. Is it weekly? Yes, it is a weekly candle, but you can see the past few months we've been increasing. Okay, we've been getting more and more unemployment rate. This is for America, by the way, and yeah, heading towards that 5%. So this is worrying in a sense. Now, this is the Federal Reserve balance sheet, and this is very important because this shows every time, by the way, where the chart is going up, that is an indicator of quantitative easing, just to keep it very, very simple. So this is the balance sheet. I'm just going to quickly read if there is okay, there's no description on this, but this is the Federal Reserve balance sheet. Effectively, that's their assets that they're holding, of which can be government bonds, etc., etc. So we want the Feds to start buying and adding to their balance sheet so that they can add liquidity, more money in the market, which, as I mentioned earlier in this video, this is a good thing. The fact that we haven't seen the chart starting to head up, we're only seeing it starting to bottom down, because in the past few years, since 2022, they've been selling off, guys. This phase right here, this is called quantitative tightening. Okay, quantitative tightening, where the inflation rate starts to go low, interest rates generally start to go higher, because of course they're also selling the government bonds, and here in our case the Federal Reserve is literally selling their assets. So hopefully soon we're going to start seeing this chart starting to head up. I'm telling you, as soon as we see that starting to head up, guys, crazy. Risk on assets like Bitcoin, risk on assets like Ethereum, risk on assets like PulseChain will be crazy. We've already seen what happened to PDAI, what happened to the core, like earlier this week, where we've had a day where like they all went up 20%. Imagine we have that 20%, but it's day after day for like 30 days in a row. You do the maths. Where can the prices go from there? We're still a chain with no centralized exchange, guys. We're betting on that retail FOMO. We're still not there yet, even though we've seen so much gains, guys, in the past few months. I'll be very honest with you guys. Look at this. So this is the price of like today, the performance today, major corrections, right? But as I mentioned, always zoom out, reduce the noise. If we look at 90-day performance in PulseChain, look at this, guys. 6.3x on PDAI, PWBTC, 3x effectively. And shout out to DWB. Shout out to them, by the way. I just don't include them because, you know, it's a Core 7 ecosystem. But yeah, this is a great meme coin. And here, INC plus 85%. Like, this is a stock trader's dream. This is their salary of 2 years, maybe even 3 actually, because some of them are happy to get 20% APY, not even APR, which is crazy. So yeah, you can see this. Like, guys, zoom out. We've been doing well, considering that Bitcoin dominance is still at 60 something percent, 61%. And the same thing with Ethereum, right? We're getting hit, yes, with corrections. We're still at 0.03 ETH/BTC ratio. We zoom out, we realize, look how far we came back. And this was the candlestick, hammer candlestick. Since then, we've done a crazy, you know, almost a 2x in terms of ETH/BTC ratio in a matter of like 90 days, 3 months. And all of a sudden, all of a sudden, sorry, this shift button is, I need to disable it. It's so annoying. Anyways, I was going to say, all of a sudden, we have a 6% correction and everyone's panicking. Like, do you know what I mean? It kind of reminds me of that meme where, like, you know, Bitcoin has gone all the way up and then like it's gone up at like 3x. And then we're being hit with a 10% correction and everyone's like, oh my God, it's over. Oh, do you know what I mean? Like, it literally feels like that right now. But yes, I understand probably a lot of people got liquidated. This is why I tell people stay away from leveraging and don't really short. You also can wreck yourself. We've seen what happened with, you know, sometimes being a whale doesn't necessarily mean that you're smart, by the way. So don't follow like whales, because there's a whale, James Wynn, I'm pretty sure everyone knew about that story where he did I think this was actually a long position worth $100 million, guys. And guess what? Like, he got hunted down. When you make leverage positions, you understand that your data is public. So you have manipulators, people who are looking to make money. They'll be like, oh, hold on. He put his stop loss at that level. Let's quickly do some arbitrage or some quick high frequency trading, whatever, to wick that price just under there for a few seconds and then bring it back up. They can do that. So be careful with leveraging. Guys, please be careful. You know, stick to spot positions where time is not a factor, where you're not borrowing other people's money. Okay? That's just some non-financial, non-therapeutic, even though someone called me a therapist. This is just friendly advice, okay? But anyways, like, we're looking good, guys. Corrections are fine. We're never going to see charts that go straight up in a line. Show me a chart that did that, that moves in straight lines. Never. This is like waves, right? Also same thing with sine waves. So yeah, anyways, I also wanted to show you guys, I'll quickly get back to this. This is also the Bitcoin dominance. This is what I'm talking about, which, by the way, Bitcoin dominance is one of the strongest indicators for an altcoin season, where if I change this here to a candle, where the Now, the dominance of Bitcoin effectively means like, okay, Ethereum is gaining more dominance in terms of market cap when you take the whole total crypto market, which right now is at 3.6 trillion, and then now you divide it up. What are the ratios? Bitcoin, non-Bitcoin, or Ethereum, and then of course non-Ethereum, which in our case here is others, where it's everything outside of the top 10 coin market cap rankings, and that's, I guess, a definition of altcoin in our case. But yeah, like that one is really important as well. You can see the others.d, which is the dominance. And yeah, like this is very important, effectively meaning that the altcoins rate of growth is surpassing Bitcoin. We are still at the all-time highs of Bitcoin dominance, so we can't really expect much from your altcoins that you're holding. So stay patient, because we're going to soon start seeing the falling knife. Now, I did initially, and I remember making videos talking about this, and I thought that we're going to see, and we did. This is actually in this part right here. This was a mini altcoin season, but I thought it was going to be the official first wave, but it wasn't. But guess what? In that mini altcoin season, we still saw PulseChain do like a 30 to a 40x. That was crazy. PDAI went to 3 cents in that mini altcoin season when, by the way, this is a false break down. This was a false breakdown, because we thought it was Bitcoin dominance is going to go down to 40%, because that's the target. Okay, I'll give you some quick alpha here. 40%, plus or minus maybe 10% from there, to give you a range. That's going to be the top signal, one of the top signals that you guys should put down in your system to take profits per week. Top signals of the altcoin season. So keep that in mind. I'm giving you guys a lot of information here. Like, this has taken so much time for me to understand these mindset models. So I really hope you guys appreciate it. Literally, just do me a favor. Like this video, comment down below. Tell me if you've learned something new. Join my Telegram. I will put it on private. Like, I'm just trying to find free time to put that Telegram chat in private, because that's it. Like, consider yourself lucky for joining if you haven't joined already. Like, I'm going to make it private, and that's it. I'm quite happy with the amount of people there. It is very high value conversation. Everyone is real. It's a value add in terms of questions and discussions, even though, it's not the same perspective as mine, or even same opinions that I share with. It's really great to have diverse thoughts. It really is just in general. I really do like that. So anyways, farmers community, join it while you still can. So anyways, moving on. And I really, this is one of the main parts of the video that I wanted to talk about. Okay, even though it's at almost 1 a.m. and I need to go to sleep. I need to wake up at 5. But this excites me, guys, to show you. Look at this crazy stuff, okay? People are bearish, literally calling that, oh yeah, this is the end of the bull run. Guys, that was it. Like, GG. Like, if you didn't take profits now, try again next bull run. Like, they're trying to say, like, okay, now we're banished to wait another bear market up until, I don't know, the next the next Bitcoin halving, which is in 2028. That's kind of crazy, because I just want to show you guys, this is the fear and greed index. We're at 57, which is neutral, even though Bitcoin is at above 115, or roughly right now 115, maybe even 113K right now. But it's above 110K. Okay? Look at this. If we go back to that mini altcoin season that we talked about, we were at extreme greed, and Bitcoin price was around 90 or 100,000, and it was at extreme greed. Now, Bitcoin is at 110,000, almost 115, and it was 115, 119 actually the past few days. And we're at 57 neutral. So that puts into perspective, in the next extreme greed phase, where would the price of Bitcoin be? Guys, this is why I'm telling you, pullbacks are actually really good, because we don't want to rise too rapidly. Okay? Like, put that into perspective, guys. We used to be at 100K. That was extreme greed. Now we're at 110K, and it's at neutral. Guys, it's at neutral. So this, just one of the reminders. We have great times ahead of us. Okay, and I mentioned Global Liquidity Index quickly earlier. And I just want to quickly show you guys, this is one of the macroeconomics that I really love to keep track of. Okay, this is the M2 money supply, which you can quickly Google this. I don't want to really go through this. I'll show you guys as well what's the Global Liquidity Index looking, but usually with the M2 money supply, which obviously is a superset of the M1 money supply as well. This is specifically though for the US. I believe this is the US. Oh, sorry. No, this is the global M2. Usually people put this on a 75-day delay. I talk about this a lot, by the way. And this is where we are today. Okay, with a 75-day delay, you start to see that the Bitcoin chart and the M2 money supply are pretty aligned. Look at this, the same tops, the same consolidation periods, the same corrections. Okay, and matter of fact, if you were looking at the M2 money supply, you would have seen the correction that we've had in early of this year from a mile away, guys, from a mile away. And you would have taken profits on your Bitcoin or on your altcoins in general, and then you would have been able to buy back cheaper. And I remember talking about this phase right here, and I told people, wait till the end of March. We're looking at the M2 money supply has been increasing. Look at where we are today. So yes, where we are today, it does seem like a correction was kind of expected, especially with the S&P 500. There's usually a very short term correction that happens after a large rapid increase. I'm not going to open the S&P 500, but you can quickly do that as an exercise. So we're going through that right now. A short-term correction that means nothing if you are an investor. Simple. Okay, and look at this. The M2 money supply is laying out the way ahead of us for Bitcoin, which does make me believe in the aspirational milestone of a 200k Bitcoin. Okay, now of course you put a plus or minus, I don't know, 15% on that. For example, here, a 15% from there is roughly around 169,000. So, round it down to 160k. 160k is my first milestone of Bitcoin. Okay, anything above that, really great. I'm telling you guys, it is possible. But yes, we're now looking at the global liquidity, M2 money supply. There is a large correction here, which, by the way, if we align this in terms of the date, you can see this top is going to be around September. And I do believe it can be around September time, maybe even October. And then we're going to see a correction, and we're going to see the second wave sometime in early 2026. Okay, so anyways, this is just my thoughts, looking at the graphs, looking at patterns and stuff. I'm not doing crazy technical analysis. Obviously, it's great to use as a tool set, but you need to understand when to apply them, and as well, sometimes less is more. As I mentioned, just looking at the price charts and just macroeconomics in general can be enough for you to get where things are headed at. Especially if you're more of a long-term investor, you don't need to do as much, because the more technical analysis indicators you have, that's the more variables for you to juggle around with and be like, okay, does that make sense? And some of them contradict, etc., etc. But anyways, all I'm trying to say, very bullish. This is expected. Now, this is the global liquidity index. I also wanted to show this. Now, yes, we have been hit with a correction. So you can see the global liquidity index, which, I can quickly show you guys what is it made of. Look at this. The others, country M2, Federal Reserve, Treasury account, and a bunch of other central banks. So obviously probably around 80 central banks around the world, USA money, Europe money supply, China money. Like, it adds all that together, and then we have this charts. And then now we compare it with Bitcoin. You can kind of see it's beautifully aligning together, guys. Beautifully aligning together. And yeah, it has been rising. Like, look, we've been in a trend. And yes, we have had corrections previously. This is normal. But what I'm trying to tell you, keep an eye on the global liquidity. This is a really great chart for you to keep an eye on. It prints on a daily, and you can see immediately, actually, a nice little bounce off right there. So I'm very curious to see where that is. And by the way, quick fun fact, we just broke its all-time high in mid-April. So bull run really just started 100 days ago, guys. It just started 100 days ago. It didn't start in 2024. Okay, like, that's the most exciting part. We just broken out of global liquidity index like 3 months ago. Like, that's the crazy part. Mid of April, the S&P 500 just also broke all-time high. Bitcoin just broke its all-time high last month, guys. Just broke its all-time high last month, and people are so quick to be like, "Oh, it's the end of it." They're gonna sell their bags. They're going to buy back at a more expensive price. And then they're gonna add hashtag Bitcoin in their Twitter as if they've been here since day one. I'm telling you guys, everyone is gonna sound like a believer. What differentiates us is literally the buy prices. I'm gonna just say that. You know what I mean? So yeah, I mean, guys, listen. I think I'm gonna end the video there. Really, I wanted to cover other few things. But you know what? I'm gonna just end it perhaps with this. Okay, in 2017 to 2018, you missed DeFi 1.0, which was Uniswap, which was stable coins, Ethereum launching, etc. Right, and then some lending protocols, etc. I believe Maker as well launched at that time. In 2020 to 2021, you missed, and this is the altcoin season, you missed DeFi 2.0. So stuff like Aave, Curve, Hex, the 10,000X, the same founder, Richard Hart, who launched PulseChain, the one we have right now. Yield farming and staking, that was kind of the main narratives, right? And of course, meme coins were kind of created as a category there because of Dogecoin, especially when Elon Musk started tweeting about it. And now here we are today in the present day, in 2025, 2026. You do not want to miss out on DeFi 3.0, where the unicorn of this upcoming DeFi season could be PDAI, the first unstable coin or the first stable coin that started with the supply but not with the backing, as opposed to how a regular stable coin starts with the backing and then the supply starts increasing. Guys, we've never had this narrative before. We've never had a full system state copy of Ethereum, which is PulseChain. It's one of its own kind. Never been done before in narratives. That's what I'm betting on. Same thing with PWBC. Imagine when this reaches Bitcoin's price. This is my educated risk in this cycle. And I will stay patient. And I will hold most of these in the bear market. Guys, PulseChain is going to be a black hole of liquidity. Guys, it's going to attract people, whales, who had their WBTC on Ethereum not earning any yield. They're going to come to PulseChain and be like, hold on, I can literally make yield on my WBTC in PulseX farms, in obviously other forked lending protocols like we have a Better Bank and much more. Like, it's really, really exciting. PulseX, is my favorite, obviously, is PulseX because it's native to PulseChain, which, by the way, Ethereum doesn't have a native DEX. Ethereum doesn't have a native stablecoin. What Ethereum has is Ethereum Foundation, which I talked about in the previous video, which dump on people's heads. Not a lot of people know this. Same thing with other stuff like XRP, for example. People are so bullish on XRP, which fair enough, right? If you were there in this first cycle that did 600x, of course, good on you. But now people are jumping on way too late, being the late majority. So look up the S-curve of adoption, which, by the way, Richard Hart teaches this. You're part of the late majority. This is where it really plateaus in terms of rate of growth. It's no longer its first cycle. We're not going to see 100x with XRP. It's barely maybe going to hit $10 this cycle. But at the same time, people don't know that XRP has monthly token unlocks. Monthly token unlocks. And what the team does, they re-add and relock some of them, but sometimes they send a portion of that to centralized exchanges, which there, we can't really know what's happening with the money. What are they doing? Are they doing OTC deals and effectively selling that, paying themselves, whatever? We don't know. So I'm telling you, be careful. Here in PulseChain, we don't have venture capitalists. We don't have an Ethereum Foundation. We don't have unlocked tokens that are just, being sold. No. We have the OA, which is a proven concept. We've seen that in EHEX, this token right here, one of the top narratives in the last cycle. Yeah, it had an OA, the origin address, never sold. Is it Richard Hart? We don't know. Could be an AI bot. But that's besides the point. We have an OA here in PulseChain. They never sold. Matter of fact, the OA staked its HEX holdings in 5 days. Locked staking in HEX, making HEX very scarce. The number of supply of HEX available in the liquidity pools to buy is very low. It's like, I don't know, 300 million. We're going to actually talk more about it in the next video. So yeah, I want to end the video there. I want to see how long this video is, by the way. 34 minutes. Wow. Okay, fair enough. I wanted this to be a quick video, but you know, when I get really passionate, I really love to talk more about this. So quickly, I just wanted to say a big shout out to this comment. Hubert says, can you make a video on how to buy them? Please, I don't want to buy the wrong thing. That's literally the exact next video. I wanted to put that on pause to kind of address today's market. So that will be the next video. Stay tuned. And then here to the highlighted comments, you know, big shout out to Ed here, says, a lot from the UK, been watching your coverage for a while now and liking it. Please, as things progress in August, it would be appreciated greatly if you share your opinion on the all-time high of EHEX, PHEX, Pulse, PulseX, INC. Not financial advice, obviously. Looking forward to it. Bless. So it's kind of like a price prediction. I shall do that. And yeah, here's from, and thank you for the comment, by the way. And here's Anthony. Here it says, I love your post always. I put them on my big screen. Even my kids watch it. That means a lot, actually. Thank you very much. You know, I just love making videos that I wished I had to watch in my previous cycle, because in my previous cycle I actually didn't know much. It was my first cycle, and then I didn't really have the right people, the right sources of information, because a lot of them they had ulterior motives, and just in general I had that perception of people with high number of followers means that they, you know, they're right for a reason, or, you know, they have that for a reason, as in, but actually sometimes when you get more followers, your values end up changing, which is actually quite scary, which is why I like to do self-reflections very frequently. And yeah, here's another comment from Cryptographer Land, says, great content as always, brother Khaled. And from Lebruka says, love this channel. Well, thank you very much. And to the highlighted YouTube members here, thank you very much for choosing to support me. Everything is greatly appreciated. They have access to my members exclusive videos. Guys, listen, I'm going to end the video there. If you haven't, by the way, go follow me on my Twitter, link in the description, or join my Telegram while it is still public. You are lucky. So I hope you guys learned something new today, and I hope I've instilled some confidence in your bags and confidence in your thoughts of the whole general bull run. So I'm looking forward to it, guys. Do remember, a big shout out to the man above. Trust in the process and trust in the one and only God. I'll catch you guys soon, and take care. Bye bye.